Everyone, I'm Pete Wilson from Alpine Agency. I'm an executive vice president and co-owner. Just a brief background on me. I joined the company in 1995 when my brother and I purchased the agency from my father. So I've been in the insurance industry about 25 years, and I can say this is the most significant change we have seen in auto insurance since I've been in the insurance business, and probably for 40 years. So it is a big change. I think it's important that people get educated on what the changes are about, and I appreciate you all being here. What we're going to do today is I'm going to try to give you an overview of the changes in Michigan no fault. I'm going to try to keep the topics a little broader. I'm going to stop at different places for people to ask questions. I am going to suggest that for details about your own policy, be sure to ask your agent. So everyone's got a unique circumstance. Not every insurance company is 100% the same. The underlying coverage is the same, but the mechanics of how they're going to handle the changeover might be a little bit different. So I don't want to confuse people with that. There's going to be a lot of information today. I'm going to try to keep it, pretty clear for everyone. I'll do my best. If you have questions after the presentation or tomorrow, you can always call any of us here at Alpine Agency, whether you're a customer or not. We've been going to webinars about this since October, and we're in the insurance business, and it certainly can be confusing to us or the layperson when you're initially introduced to the topic. So plan on hearing it more than once before you get all the details. So this is a good introduction, and it should get you a good start. There's going to be an opportunity for you to save money with this no-fault auto reform, but it does come with reduced coverage. So you're going to want to make sure you understand your options and consider them closely. Like anything, you get what you pay for, and we'll go through that as we go along. The changes go into effect on July 1st. So for those policies that renew July 2nd or after are going to go under the new no-fault law and will have access to these options. Also, if your policy renews, say, in October or November, and you want to take advantage of these options sooner, most companies will allow you to cancel and rewrite your policy early, make the changes for no fault, take advantage of the savings, and then your renewal date will stay the same as the original policy. So say you have a December 1st renewal date. You don't want to wait till December 1st to take advantage of these savings. Call your agent. Chances are they can cancel your policy effective July 2nd, put you in a new policy that goes from July 2nd to December 1st, so it will continue to renew at the same date you're used to, but you'll be under the new rules sooner. So let's go just a brief history of how we got to where we are. Why are we going through these changes? So number one thing, prior to 1973, Michigan was an at-fault state. Most of this country, most of the states in the United States are at fault still. There's about 12 or 13 that are like Michigan that are not at fault. But with an at-fault state, drivers who caused an accident were responsible for whoever damages they did or caused. So if they hurt somebody or damaged their car, that person would be responsible. Well, what happened is because of that, determining who was at fault in an accident led to a lot of lawsuits. So who was at fault became very important, and therefore there was a lot of lawsuits related to it. And what happened was Michigan courts got bogged down with these suits, and the insurance rates went skyrocketing. Now this was in '73. So the state decided that they're going to implement no fault. So in 1973, to combat these rising insurance costs, they decided that there's going to be no lawsuits after an accident. It's going to be no fault, and the only time you're going to sue one another is if there's a severe injury, disfigurement, or death. But for all other accidents, no lawsuits, everyone pays their own bills and moves on. That was the concept. And in order to put that all together, the legislature felt we needed to have this unlimited medical component. And what that meant was if you were hurt in an auto accident, your medical bills were going to get paid with no copays, no deductibles, no limitations. So you didn't need to sue the other driver to get your medical bills paid. They were going to be paid automatically by your insurance company. Therefore, it eliminated a lot of the need for the lawsuits to begin with. That was the thought. So when they put this together, And it's interesting, if you look at this slide, what we're showing here is what the other states were doing for medical insurance. And you can see where Michigan is way up here with unlimited, if I can get it in the right spot here. And the rest of the states are much lower. So even New Jersey, which is the next highest state, only has $250,000 in medical coverage compared to unlimited in Michigan. But look at as you go down the list. Florida, there in the middle, only has $10,000 in medical coverage. So if you're injured in an auto accident in Florida, the most you're going to get for your medical bills in the state of Florida is $10,000. The rest is going to need to be paid by either your Blue Cross or Medicare or whatever other coverage you have. So Michigan is very unique in the sense of the amount that we offer in medical coverage. What happened though, because we have this much broader coverage, we end up now here in 2000, well this slide's from 2018, but now we have the most expensive auto insurance in the entire country. So this was the problem that the legislature wanted to address with this reform. Now we've somehow drifted into this position. And this slide just kind of is a representation. You're in Ohio, you're paying $1,000 for car insurance. You're in Michigan, you're paying $2,600. So this is the purpose of Michigan no-fault auto reform. So let's take a look at what were the basic things that are going to change. Number one, instead of having unlimited medical benefits, you're going to have a choice to either keep the unlimited or choose lower limits. So this is the number one biggest change, and the one that is kind of the heart of the whole thing, in that you're really going to want to get a handle on and understand. Number two, they implemented a fee schedule on auto insurance for medical bills. Right now, if you go to the hospital and it's due to a car accident, the hospital pays their normal, or charges the normal customary fee, whatever that happens to be. But if you go for Medicare or Blue Cross or Priority Health, there's a fee schedule that says, the insurance company says, this is the most we're going to pay for this service. Auto doesn't have that. Now it's going to have that. Guaranteed premium reductions. One of the things the legislature was concerned about was they were going to offer, or allow these insurance companies to offer less coverage, but then they turn around and we're going to offer those savings down to the policyholders. So they put in some guaranteed savings provisions to make sure that if you do choose lower limits, you're actually going to experience some savings. They changed the PIP order of priority. So PIP, and I'm going to use the word PIP a lot in this presentation. And PIP stands for Personal Injury Protection. PIP is when your auto policy pays for your medical bills when you're injured. It's all about your own medical bills. That's your PIP coverage. The order of priority says, when does your policy pay your medical bills and when does someone else's policy pay the medical bills? And that is one of the things they changed, and it's going to be a significant change that we're going to talk about. And the last thing of the key changes we're going to talk a little bit about is this bodily injury limit. Bodily injury, don't confuse that with PIP. This is where it does get confusing. PIP is to pay your own personal medical bills. Bodily injury is if you hurt the other guy and they sue you, how much protection do you have and how much will your insurance policy pay them if you lose a lawsuit? So bodily injury is if you hurt another person and they sue you, how much coverage do you have to protect yourself? So let's start with the PIP coverage options. Again, this is the biggest part of this, and this is where you want to pay the most attention. So let's understand personal injury protection. What is it? I've told you it's going to pay your medical bills. So there's 4 components to this coverage. The first is what they call allowable expenses. This pays your medical expenses. That's easy. Going to the hospital, getting a surgery, doctor visits, drugs, that sort of thing, medical expenses. It also pays your attendant care. If you're hurt bad enough to end up in nursing care, your auto policy would pay all those fees to the nursing care facility to help you with your injuries. Accommodations, They would renovate your home if it was necessary in order for you to get around following your injury. Rehabilitation, special transport if they needed to modify your car so you could drive it after you're injured so severely. Mileage to and from the hospital, for instance, or guarding expenses and funeral expenses. These are called allowable expenses. This is the item that you're going to choose what limit you want. Right now, you have unlimited. There's no limit for any of those expenses on your auto policy. With no fault reform, you're going to be able to choose a lower limit than unlimited. The other three components that are part of PIP are work loss benefits that last for 3 years, survivor benefits that would go to your spouse or children should you be killed in an accident, and replacement services, someone to come in and mow your lawn or do your dishes or do the laundry because you're injured and you can no longer do it. So when we talk about PIP reform, we're going to talk about your options for number 1, allowable expenses. 2, 3, and 4 are still going to be on your policy no matter what option you pick. So just number 1. So let's look at our options. So instead of having one option like you have now, buy unlimited, you're going to have 6 options. These are the 6 options. And I'm going to go through them individually one at a time. So let's start with option number 1. Unlimited. That's what you have now. You can keep it just the way it is. You don't have to do anything. You'll have the same coverage you have now. Some of you who have Blue Cross already coordinate your benefits with Blue Cross, and you get a little bit of a premium reduction for doing that, meaning your health insurance pays for what it can pay, and your auto PIP coverage pays for what your health insurance doesn't pay. An example is your co-pays and deductibles, or Blue Cross doesn't pay for nursing care. Well, your auto policy does. You can keep all that just the way it is, and you'll still save money. Number 2, you could pick a $500,000 limit. Again, I had those 4 things that you get on PIP. We're only talking about number 1. So we would limit your allowable expenses to $500,000. So surgeries, office visits, attendant care, accommodation, rehabilitation, mileage, all those things. Once you've exhausted that limit of $500,000, the auto stops paying, and now you'd have to look to your other forms of health insurance. So it could be Medicare, Medicaid, Blue Cross, Priority Health, Aetna, whoever. So if you choose $500,000, the auto pays the first $500, and then they stop. If you remember that list in the first slide that I showed you, New Jersey has the highest limit available in the rest of the country, and that's capped at $250. So even if you picked 500, you'd have the highest limit in the country other than other people in Michigan. Number 3, same as number 2, really, just $250,000. So these are pretty easy. Unlimited, 500, 250. If you pick the $500,000 limit and you coordinated it with your Blue Cross, those two would work together. So your Blue Cross would pay for your surgeries you need and your prescription drugs you might need and your office visits, and the auto would pay your co-pays, your deductibles, and your attendant care if you ended up in nursing care for a year or something, your allowable, all those other allowable expense items, and they could work together so that $500,000 could last quite a long time. If you don't have other health insurance, then they just pay up front for all of it. Okay, this is where it gets a little more complicated. Option number 4. Option number 4, while it says you can choose a $250,000 limit, it allows you to exclude yourself and others completely from coverage. So you'd have no allowable expenses. Coverage would be 0. But in order to do that, you have to have a qualified healthcare coverage. In other words, you just can't choose to be excluded. You have to prove or have this other qualified healthcare coverage. And on the bottom of the slide, I define what that is. So qualified healthcare coverage is private insurance that does not limit or exclude medical benefits from an auto accident and has a deductible of $6,000 or less. So you have a Blue Cross policy with a $2,000 deductible, chances are it's going to qualify as qualified healthcare coverage. Secondly, Medicare with Parts A and B are also considered qualified healthcare coverage, okay? So option 4 allows you to opt out completely for coverage, either some of the people in your household or all of the people in your household. And what you can do then is you can pick this $250,000 limit and say, well, my wife and I are on Blue Cross. My 24-year-old daughter lives with us and she doesn't have any health care coverage. So I'm going to choose 250. I'm going to exclude myself. I'm going to exclude my husband, but I'm going to leave my daughter on and she'll have $250,000 worth of coverage should there be an accident. Or you could exclude husband, wife, daughter, and leave the son on. Point is, you could have some people included, some excluded. The only caveat with this that's kind of a little quirky is if you're on Medicare, one of the named insureds, on your auto policy, there's a named insureds, and those are usually the husband and wife. They're on the front page of the policy. They're the ones who can call and make changes. You may have a list of drivers. Kids might be listed as drivers, but they're not named insureds. The named insureds are the people who are on the address box, basically. Those two, if they're on Medicare, they can't be excluded under option 4. Only they'll think of this one applying to the people with Blue Cross or some other private insurance. So let me move on. We'll come back and we can kind of cover it all. Number 5, option 5, is Medicaid. If you're on Medicaid, you can pick a $50,000 limit. Now, Medicaid doesn't let you coordinate benefits. So if you pick the $50,000 limit on Medicaid, auto pays the first $50,000 of allowable expenses, and then Medicaid would pay everything else with whatever their rules are. Number 6, I'm coming back to the Medicare people because a lot of people fall in this category in our area. If you have Medicare, Parts A and B, and everyone in your household either is on Medicare with A and B, or they have a Blue Cross policy that's a qualified healthcare coverage, or they have an auto policy that includes PIP coverage, then you can pick number 6 and exclude 100% of the medical benefits from your auto. You get in an auto accident, you're just going to go to Medicare. No difference than if you had a stroke, or you fell out of a tree, or you fell down the stairs, or whatever it might be that puts you in the hospital. Whatever Medicare pays or doesn't pay, that's what you're going to get after an auto accident. And then everyone in the household, though, has to have a qualified healthcare coverage or an auto policy that pays PIP. It's a little bit different than option 4, because option 4, we could hunt and peck. We could have one person covered and one person not covered. And number 6, nobody's covered. Everyone has to have qualified healthcare coverage, or you can't pick that option. Those are the 6 options you get to choose from. Let me just give you a little information and then we'll talk about questions. If you pick any option other than unlimited, any one of those other 5, you have to fill out a form every year and send it in with your auto policy. If you don't fill this form in, you're going back to unlimited. So what we're seeing, and we've been dealing with this now for about a month because the companies have been sending, for those people renewing in July and people renewing in August, they're starting to get the information under the new no-fault auto law, which includes the paperwork they need to fill out. It's 4 pages long. It's a little daunting. You're going to want to call your agent or call us, and we can answer your questions on what to fill out and how to fill it out. But the idea is you're going to fill it out every year or every renewal if it's in 6 months. Regardless of what you said last time, doesn't matter. The new renewal, it's going back to unlimited unless you fill out this paperwork. If you choose to be excluded, let's say you picked option number 4, you have Blue Cross, your wife has Blue Cross, you want to be excluded, why pay double for medical insurance? I already have it. That's great. But if you lose that medical coverage, say you lose your job and now you don't have Blue Cross anymore, who's going to pay your medical bills if you get hurt in an auto accident? You've picked excluded. You're excluded. So there's no coverage on the PIP. You were counting on Blue Cross, but now you lost it. You better make sure you call your agent if you lose that coverage and get added back onto the auto, or you're going to have no coverage. They have a clause in here, you have a 30-day window. So from the day you lose your Blue Cross policy to the day you call your agent to add it back on, for that 30 days you have coverage. After 30 days, you're running around with no coverage. So it's just a really important thing to keep in mind. Secondly, if you choose one of these excluded items, if you're hurt in an auto accident today, or well, let's say in July after the new law goes into effect, you're excluded. And you're counting on Blue Cross to pay for your medical bills. But if you have an injury that lingers on, say 2, 3, 4, 5 years, each time you go to the doctor, you have to use whatever medical coverage you have at that time. It's not going to go back to who insured you the day you had the accident. It's going to be whoever's your medical carrier the time you need that next surgery. So when you do that, you just need to realize that you have to keep medical coverage in force basically the rest of your life to pay for those injuries. So it could get people in a bind. Okay, is there any, before I get into this next segment, which I'm going to talk about the savings, what do we have for questions about the coverage? Anybody?
So we do have one question. The question is, how does a Medicare Advantage policy relate to option 6?
So a Medicare Advantage plan is just fine. If you have a Medicare Advantage plan, you have Medicare A and B, and therefore you would qualify under option 6, and you could choose to completely opt out of coverage.
And we have another question. How do I know if my health care qualifies?
Okay, so this is an area that we, or the agent, your car insurance agent, can't necessarily answer. You have to go to your HR department at your work, or directly to your health insurer, or ask the agent that sold you the health insurance policy. In general, I can tell you this. If you work for an employer that has less than 75 employees and you have a Blue Cross policy, chances are it's going to qualify. If you have an individual health insurance policy, chances are it's going to qualify. Where it gets a little dicey is large employers that have 250 people, they actually have their own policy. Blue Cross administers the claims and you get a Blue Cross card, but the employer is actually paying the bills when you go to the doctor, and they kind of come up with their own rules within certain constraints because it's got to be approved by the state of Michigan. But they could have a rule that says we don't pay in the case of an auto accident. We have employers locally here that have rules on their Blue Cross that says we don't pay if you get in a car accident, your Blue Cross doesn't pay. So those people need to recognize that and either get unlimited or stick with the $500,000 or $250,000 limit because they cannot not be excluded. But again, that's something you have to ask your provider. We don't know just by looking at the Blue Cross card. It doesn't tell us.
And another question, what are my options if my insurance renews on 6/26 of 20?
Okay, that's a good question. So what's going to happen is on 6/26, your policy is going to renew under the old rules. You're going to get unlimited medical, etc. But you can call your agent and have that policy canceled on July 2nd, and they'll write you a new policy that goes from July 2nd to June 26th under the new rules, and you'll go back to a June 26th renewal date. So you could choose to take advantage of it July 2nd. Now, I will tell you, not every insurance company is doing this the same. Auto owners and Pioneer in particular, the ones we deal with a lot, they will just kind of do this all internally. You fill out the form, we send it in, they cancel your policy, they rewrite your policy, they take whatever money you have on account, they apply it to the new policy. It's sort of seamless to the customer. Progressive, for instance, requires us to actually cancel the policy and write a brand new one. So they're doing it a little different. So every company's a little bit different, but you absolutely can take advantage of this. And if your insurance carrier isn't doing what you want them to do, I'm just going to tell you, you can call us and we'll write you a brand new policy July 2nd. So anyone can write you a new policy July 2nd, and you can take advantage of the new rules.
Okay, that's all we have for now.
Okay.
Yeah, I have a follow-up question on, like you mentioned, a lot of people are on Medicare and if you have a Medicare Advantage, then you could qualify for option 6. Can we expect our Medicare Advantage premiums to go up if they now become primary?
Well, on an individual basis, no, because they're not rated that way. But what we're seeing, or what I'm anticipating, is for right now, for 49 states, in 49 states, Medicare is paying, and Medicare Advantage plans and supplements are paying all these auto accident bills in all the other states. Michigan, we've all put money into the Medicare system, but when we get injured in an accident, our auto policy pays. So we paid into the Medicare system, then we bought health insurance again on our auto, and we get injured. Michigan pays the unlimited medical benefits. Well, the rest of the country is getting a discount on our injuries because we never went into the system. So when our injuries get put into the Medicare system, will that have a pressure on the rates? It might, similar to our local Blue Cross. So all of us that have Blue Cross policies in the state of Michigan, Blue Cross has not been charging much for auto accidents because most of us have unlimited medical. Well, we all have unlimited medical. So it just depends a little bit on whether we coordinated benefits or not. But needless to say, that's a good question. Someone's going to pay the bill, right? You get injured in an accident, someone has to pay that bill, and then some insurance company is going to want to collect the money back.
Okay, thank you.
I don't have anything else for you, Pete.
Okay, so let's go into the savings. So what I have here on this slide is showing you a typical declarations page from an auto policy. And what I want to point out here is there's a lot of charges on your auto policy other than personal injury protection, or PIP. And you can see them all. You got, collision, comp, bodily injury, etc. So the savings we're talking about tonight is only applicable to what I have circled there: personal injury protection and the MCCA, MATPA. Those two coverages are the ones where you're going to see the savings. And those two coverages are split into two components. And I'm going to show this on the next slide, but maybe it's easier to see it here. The personal injury protection, that $199.19 in this customer, and some people have that could be $500, and some people that's $70. That coverage is all over the map, depending on what your insurance score is and how old you are and what cars you're driving and stuff like that. But that's the money that goes to your insurance company. The MCCA fee, which you see at $223.76, that's the money that goes to the Michigan Fund to pay for medical benefits that exceed $580,000. That $220 is the base fee, and the $3.76 is the administration fee. But every single policy is getting charged basically the exact same amount, $220 per car. Whether you're with Pioneer, Hastings, or Auto Owners, it doesn't matter. You're all paying the same. The one above is the insurance company's piece, and that's the $199, and that's the one that varies. Those are the two charges we're going to be talking about. Michigan Catastrophic Claims Association. So let's talk about that charge, the $220 charge I just showed you. What is it? Let me just explain it. MCCA is a private, nonprofit association whose mission it is to pay PIP benefits in excess of $580,000. So when you're hurt in an auto accident, your insurance company pays the first $580, and once your bills exceed $580, then you go to the MCCA, and that's where the $220 charge is for, to pay those bills beyond the first $580. So I already mentioned your auto insurance company pays the first $580. MCCA, which I kind of refer to as the state, although it's really not, but they pay the next $580. And I mentioned this in the first slide. Currently, there's not this medical fee schedule. And this is a big deal because this is one of the changes that reform took part of. And what do I mean about this fee schedule? Why is that important? And this is just an example of what it looks like. And look at the bottom row. So with the fee schedule, when you go get an MRI and you're on Medicare and they give you an MRI, the hospital's going to charge whatever they want, but Medicare is only going to pay $484. That's it. Doesn't matter how much the hospital wants to get for it. They're going to get whatever their fee is. And that fee varies by region a little bit in different parts of the country and stuff like that. But this is just an example. Private insurance, like Blue Cross, says we'll pay $770, and that's all they're going to pay. And those of you who have Blue Cross, you've seen it before. You get your bill, your explanation of benefits, and it says you had $15,000 in bills. Blue Cross approved $8,500, and that's what the hospital accepted, and they wrote off the other $7,500. So that fee schedule is really important. But look at the auto insurance. They don't have a fee schedule. So when you got an MRI in the auto policy, the hospital got the full $3,259 that they wanted. And this is one of the reasons our rates are so high for the MCCA and our PIP coverage, is because the fees the auto was paying was 4, 5, 6 times more expensive than other medical providers. So this was why they put in this MCCA as part of the reform. And the reform says that from now, starting July 1st, 2021, the hospitals can only charge 200% of the Medicare rates. So we're only going to pay double what Medicare pays. And that was the compromise. So we're not going to pay 4, 5, and 6 times more than Medicare. We're still going to pay double. And that's going to help reduce our fees, because we're seeing the MCCA charge, which I showed you on that screen with the deck page, that was $223, and the $3.76 was, like I said, the administrative fee. But the $220 is the base charge. That's going to go from $220 to $100 starting July 2nd. Effective policy is renewing July 2nd. So that's a big deal. That alone cut that in half. Okay, so what about the PIP coverage premium savings? MCCA was at $580 and above. PIP is $580 and less, and that's the insurance company's piece they pay. First of all, the legislature said we're not going to let the insurance companies do a bait and switch. We're going to make you use your rates that you had before you even knew this was coming. What they didn't want the companies to do was say, oh, we got to reduce our rates. Let's jack them up here in the last month, get them really high, and then we can give them all the discounts we want, and they'll apply by the rules. So they made them say, no, you got to go back to May 1st, 2019, use those PIP rates from 2019, and then you've got to keep those rates flat for 8 years. So this was the way to provide that protection so you didn't get the bait and switch. Then they said, depending on the selection you pick, 1, 2, 3, 4, 5, or 6, you then have to apply an additional discount to that PIP rate. So if you have unlimited right now and your policy renews after July 2nd, the MCCA is going to go from $220 to $100. You pick unlimited, you're going to get a 10% discount on that PIP rate. If you pick 500, it's 20%, 250, 35%, 50, 45%. And if you do one of the opt-out options, it's 100%. Now, we've been doing this for a month, and there is some big savings here. Depending on the selection you pick, how many cars you have, and what your rates are. Now, if you take somebody who has no comp or collision on their policy, and most of their premium is coming from the PIP to begin with, the savings look pretty big. If you have somebody who's got 5, 6 cars, the savings can be big. I mean, we're talking $800, $1,000, $1,500. We've had policies go from $800 down to $300. But keep in mind, when your renewal comes up, when the policy renews, all the other stuff still got to happen. If you got a ticket in the last year, if you got in an at-fault accident in the last year, if your insurance score went in the tank, your underlying policy might be going up in premium, and then these savings get applied, and the savings might not be as dramatic. So there's things that go in there. So how much coverage do you need, or what you need to think about to decide what to pick? So let's just look at a couple things. First question, do you have other health insurance? Do you have disability insurance? Do you have long-term care insurance? I mean, if you have health insurance, disability insurance, long-term care insurance, I mean, you've got a lot of this covered already privately. Do you need to buy more insurance on the auto, or are you all set already? That might be a good reason to opt out. Does your health insurance qualify for a QHC, a qualified healthcare coverage? Obviously, if it does, then that opens up those other options, 4 or 6. If it doesn't qualify, well, then you're into the first 3 options. How much will you save by lowering or even eliminating your PIP coverage, and how important are those savings? When I did mine, for instance, I saved a couple $100 if I went from unlimited to 500. But if I went from 500 to opting out, I was only going to save another $150. So I might think, you know what, that savings isn't enough to give up all my medical coverage. So maybe I want to keep some. But all these decisions are a cost-benefit analysis. What coverage do I have now? How much am I going to save if I switch? And is that worth it to me? Can you afford your copays and deductibles? If you keep some amount of coverage on your auto policy, you have no copays and deductibles. If you coordinate that with your private insurance, then they work together. That works great. But if you're going to be like, I would rather pay an extra $20 a month on my auto because I can't afford my $1,500 deductible to get slapped on me one day in a car accident, then maybe opting out is not a good choice for you. How do you feel about the risk of injury in an auto versus all your other health events? If you looked at that first slide I showed you that had the list of all the PIP coverages for different states, the rest of the country is living without unlimited medical. And I don't see any of them wanting to switch to our system. No one's coming to unlimited medical. We're going the other way. However, that unlimited medical is an awesome coverage. Every year, and we've got people on our books that were injured in the 80s that are still getting benefits from their Michigan auto policy. We have people getting $2, $3, $4 million worth of medical expenses relating to an auto accident. It happens. Granted, with the fee schedule, they won't be as big, but it can happen. On the other hand, what's the flip side to that? I've been to the hospital visiting people many times. I've yet to go to visit somebody I know because of an auto accident. But I see people in the hospital for a lot of other reasons. There's a lot of ways to end up in the hospital, and you're relying on your Medicare, you're relying on your Blue Cross, your Priority Health, or whatever your medical benefits are to protect you should you fall down the stairs or have a stroke or heart attack. So there's a risk there that you're accepting for your Blue Cross to pay or Medicare. Is auto unique? I don't know. You have to think about that. Where do you feel? What makes you feel comfortable? And then, of course, what's the savings? There's one other option, too, that they are offering as part of this PIP, which is this attendant care. The attendant care is a big deal. So if you end up in a nursing care, Medicare only pays for a certain number of days. So you have a stroke, you go to the hospital, they do everything, they get you stabilized, and then you get sent to nursing care because you can't take care of yourself anymore. You can't give yourself a bath or feed yourself. You go to nursing care. Medicare is going to pay a while you're in there, then it stops. And that's why people end up on Medicaid. That's why that's such a big deal for people going into nursing care and end up in Medicaid. Well, you can buy higher attendant care limits on your auto policy. Auto Owners offers an extra $50,000. Pioneer, you can buy up to an extra $100,000. Hastings got a different limit, Progressive, etc. So you have to talk to your agent about those details. But just keep in mind, attendant care can be a big expense. I think it's about $8,500 a month right now in nursing care. So $8,500 a month, you better not be in there very long because it's going to use up a lot of medical bills real quick. I can't say this enough. Ask your agent to review the options. You're welcome to call here if you're not a current policy of ours. All of our staff is trained, our agents are trained to answer questions on this kind of stuff. And of course, we'd love to look at anybody's coverage. Okay, that ends that whole segment about PIP. Is there other questions about PIP before I go into this change in priority slide?
We do have one. Will the reduction in the MCCA fee automatically be prorated for policies in effect prior to July 1st, or do we have to have our policy rewritten?
You have to have it rewritten. Hastings, I will say, okay, I will caveat this. We have one insurance company that says they're going to automatically apply that lower fee July 2nd to everybody, whether they rewrite the policy or not. I have another insurance carrier that says that the state of Michigan isn't going to let them do that. So I'm going to ignore that for you. What I'm going to say is, yes, you have to rewrite your policy July 2nd to take advantage of that lower MCCA fee. And that's why that whole rewrite option is attractive, because you can keep unlimited benefits, keep unlimited medical, take advantage of the 10% on that, lower your MCCA from 220 to 100, so you're still going to save money for the exact same coverage you have now.
I don't have any other questions in the chat. If anyone else has a quick question, unmute yourself. Otherwise, we'll move on to the next section.
Okay. Change in priority. So why is this so important? You get hurt in an accident. The question is, who's going to pay your medical bills? What PIP coverage applies to you? That's the question. Right now, it doesn't matter really that much because everyone's got a limited. So if I get in an auto accident, I don't care if your policy pays my medical bills or the state of Michigan pays my medical bills or my own policy. I don't care. They're all going to get paid. But going forward, we're all going to have different limits. I have 500. You are opted out. Another guy's got unlimited. So who is on top of the list to pay what medical bills when? Okay, so with PIP coverage, there's an order of priority. Who pays first, who pays second, who pays third. Once you reach one of those order of priorities, that's who pays. Even if there's somebody lower on the list with a higher limit. That's really important. So if you opt out and you're number one on the priority list because you're the named insured on the policy, that's it. It doesn't matter if your kid has a policy in the household with unlimited medical benefits. We never get to his policy. We stick with your own because that's top on the priority list. So now you pick a different medical limit, then you got to live with those consequences as to how it fits in the priority list. And there's a couple instances this is going to become a big deal. So the only people that are going to get medical benefits from your policy are the named insureds, the two people on the front page, and your live-in relatives. That's it. The named insureds and your live-in relatives. Resident relatives, key words. They have to be related to you, and they have to live with you. If they don't live with you, they're not related to you, and they're not a named insured, your policy is not going to pay anything. So if your friend is visiting you from California, is in your car, you get in a serious car accident, and they're injured. We go to the priority list. They're not a named insured on your policy? Nope. Were they a live-in relative? Nope. Your policy is not going to pay them anything for their medical bills. And neither is the state of Michigan. So what does this mean then? How does this come into play? So that's one example. Or here's another one. Drivers or passengers that are not named insureds or resident relative of the named insured with an auto policy will be limited to $250,000 in coverage from the state of Michigan. So your neighbor's with you. In this instance, your neighbor's in your car. They don't have an auto policy. Your policy's not going to pay. They don't live with you. They're not named insured. They will be covered by the state of Michigan for $250,000. This applies to young adults driving parents' autos that don't live with them. This is the biggie. So your kid turned 19. They moved to Kalamazoo because they got a job. You said, sure, take my car. I'll continue to pay the policy, the insurance for another year to get you on your feet. They move out of the house. They're no longer a live-in relative. And that PIP on that vehicle will not pay for their medical injuries. They're going to have to go to the state of Michigan for that $250,000. So you stayed with unlimited because you wanted to protect everybody. Come to find out they're not a live-in relative anymore because they don't live with you. They're not getting the unlimited. They're getting only the $250,000 from the state. So if you have kids driving your vehicles that do not live with you, you need to call your agent. Second thing, boyfriend, girlfriends. And we have a lot of these nowadays. But sometimes it's the boyfriend or the girlfriend that has the insurance policy and lets one or the other drive the car. Guess what? If they're not a named insured, they don't have coverage. Because they're not a named insured, they're not a live-in relative. They live in, but not a relative, no coverage. They're relying on the state of Michigan for $250,000. So If you have those situations, you need to call your agent. Another thing that comes into play here, because I know this is the next question out there. What about college students? Okay, that's a good question. So a college student, are they a live-in relative or not? Well, I would say if they're a freshman at college, they're in the dorm, they come home in June, they live with you for the summer, they work at the Dairy Queen, and they go back to school in the fall, they're a live-in relative. They live with you. However, what if they're a grad student? Or what if they're in their senior year now and they have their own apartment and they went on an internship last summer, or they stayed all summer and worked in Ann Arbor or East Lansing and they didn't come home, and they're going to graduate from college and they already have a job in Colorado that they're going to move from their apartment at school right to Colorado. They might not be considered a live-in relative now. Just because their driver's license says they live in your household doesn't make them a household resident. Do they come home in the summers? Do they get all their mail at your house? Are they really a relative? Those are key questions. So if you have kids in college, you need to talk to your agent. Oops, a little fast there. Couple exceptions to the order of priority rules, and we'll be done. If you're driving an employer's auto, if it's during work time, you get work comp. If it's not during work time, you get whatever PIP limits he picked or she picked. So I have an LP agency vehicle. If I'm on LP agency time, I get work comp. But if I'm this Saturday taking my pickup truck to the grocery store and I get in an accident, it doesn't matter if my wife has unlimited medical benefits on her auto policy that her and I have together for her car. That's not going to come into play because the order of priority says employer's auto pays first for if you're driving an employer's auto or she's in my auto. So that's an important one. Taxi or the Uber, they pay first. And if you're in a motorcycle and you get in a car accident, if you dump your motorcycle into the ditch, you get nothing from your auto. But if you get in a car accident, you would get this, the driver's auto policy, then the owner of the vehicle, there's a different priority list. Those are the exceptions. We're getting close to the end here, okay? Is there questions about the order of priority?
I don't have any questions listed in the chat as of right now, unless
Okay.
someone wants to unmute and ask. I think we're good at the moment.
Okay. Just a couple things to go. I know it's a lot of information. Bodily injury. That's where you hurt another person and they want to sue you, okay? Before, there was a limit of 20/40, 20,000 per person you injured, 40,000 per accident. You had to have that limit to be legally on the road. They bumped that limit to 250, 500, 250,000 per person, 500,000 per accident. Don't get confused with PIP. This has got nothing to do with those 1 through 6 options. It's got nothing to do with PIP. You hurt someone, they sue you. How much is my auto policy going to protect me for? The new statutory minimum is 250,500 per accident. And if you think about it, there's going to be people out there with very little PIP coverage anymore. They're not going to have unlimited. Everyone doesn't have unlimited anymore. And if they get injured and they don't have enough money to pay their doctor or for their surgery, guess what? They're going to be looking for someone to pay. And if you're at fault, you're probably going to get sued. The state is going to set an absolute minimum of 5,100. So you can't go lower than 5,100, but 250 is the standard. Why is that important? A lot of you have 100, 300, 100,000, 300,000. That's kind of the industry standard in Michigan. If you don't go to 250, 500, they're going to make you go. It's automatic. The insurance companies are going to issue the policy with that higher limit unless you sign a form saying you want something lower. So if you want less than 250, 500, you have to fill the form out and specifically request, I want 100, 300, I want 50, 100. If you don't sign the form, it's automatically rolling to 250, 500. My recommendation is let it at least be that high, if not higher, because there's going to be lawsuits because people are going to be looking for money if they're injured in an auto accident and their car insurance doesn't pay all the bills or their medical insurance doesn't pay all the bills for some reason. These are the other no-fault changes and we'll be done real quick. I kind of mentioned it. Out-of-state drivers and non-Michigan residents will not receive PIP benefits any longer. What was happening right now is Someone flies in from California, gets in a car accident in Michigan, we pay them unlimited medical benefits, but they paid nothing. They never paid into our system. So we paid them all this money in medical bills, but they didn't pay anything in. So if you're not a state of Michigan resident, you're not getting PIP benefits. Uninsured drivers of automobiles aren't going to get PIP benefits. We know that that's been a problem because our rates are so high. We have a lot of people running around with no insurance. So they get in a car, they don't bother buying car insurance, they get in an accident, and we still pay unlimited PIP benefits for them. They paid nothing into the system, but we pay all their medical bills anyway. That's not going to happen anymore. Mini tort. This is that little thing where when you get in a small accident and the other guy doesn't have car insurance or doesn't have collision insurance, he can sue you for $1,000 to make you fix his car, even if it's $10,000 in damage. Doesn't matter. You don't have to ever pay more than $1,000. That's going to $3,000. It's automatic on everyone's policy. It's no big deal. It's just a change that's part of it. How the policies are rated. They eliminated, you can't rate it based on gender, marital status, home ownership, education level, occupation, postal code, or credit score. Woo, that sounds exciting. It's not that exciting. They don't rate it on postal code anymore, but they could do it on other geographical lines. So instead of doing 49707, they make it Alpena County. I mean, it's kind of semantics, but they can do that, just not postal code. They can't use credit score, but they can use insurance score. An insurance score, use 90% of the same information as your credit score. If you have a high credit score, you have a high insurance score. If you have a low credit score, usually you have a low insurance score. So, I mean, sounds good. I'm not sure it's a big deal. People who have failed to maintain car insurance are going to be able to buy standard auto policy for the next 18 months. So I haven't been buying auto insurance for the last 2 years because it's so outrageously expensive. But now that the rates are coming down, I'm going to jump into the system and we're going to let you buy a standard policy instead of throwing you in the high-risk pool for 6 months like we've been doing for the last 25 years. Oops. Business customers. If you own a business, you also can change your PIP limits. Your choices are unlimited, 500 or 250. You can't do the opt-out options. Why is that important? Like Alpena Agency provides me a car if my board of directors chooses to have a limit lower than unlimited, 500 or 250, then when I'm driving my vehicle on my own personal time, that's all I'm going to get from that car. They're going to make their choices on what I get my benefit of. But from a business standpoint, you have a fleet of 25 or 30 cars and you've been paying unlimited PIP benefits and you get one of these lower limits. We're seeing these people save $2,000, $3,000, $4,000, $5,000, $6,000 on their auto premium because they've been pumping a lot of money into the system. Okay, this is the end. Contact your agents early as we expect a large volume of calls as July approaches. I can't emphasize this enough. Our phone's already starting to ring. If you want to take advantage of these PIP choices, you want to try to see if you can save money in your auto insurance, I would call now. I wouldn't wait. Last thing, make sure you call your agent for questions. There's a lot of details. Everyone's circumstance is different. You need to talk to them and they can walk you through the whole thing. You know, we have a whole trained staff here. We're ready to take questions, whether you're a customer or not a customer. But main thing is make sure you talk to your agent. Just don't fill this paperwork out on your own unless you're really sure you understand what you're doing. That's what I have. Here's kind of the summary of the options. I think the PIP was the big deal. I'm more than happy to answer some questions.
I have a question.
Go ahead.
Okay, so the state minimum on the bodily injury is going to 250 to 500,000. If you had 103, how much of an increase could we expect?
That depends a little bit on the company. So every insurance company has different rates, but usually not a lot. I mean, like $20, $30, $40 a year per car. So it's not a huge number, but that is going to be more expensive. So what you'll see if you say, I want to stay unlimited, and I'm going to let my bodily injury go up, you're still going to have a net savings. Most people are going to have a net savings, but that bodily injury increase will eat up a little bit of it. But that might be, like I said, anywhere from $20 to $50 a car.
Thank you. One more quick question. As far as we had on there, like out-of-state people. Now, I know my insurance policy covered me if I rented a car, let's say in Florida. Will any of those provisions be changing, or will I have to discuss that with my agent?
Those don't change. So if you pick unlimited on your policy in Michigan and you go rent your car in Florida, it's going to stay the same. It'll follow you wherever you go.
Thank you.